name is Mark Williamson, and I'm COO for the FX, cash, trading and risk management business at HSBC. And part of my role is looking at FX related to payments. So what I wanted to do was give a bit of a background of what I've worked on and a bit about myself. So I'm close to 30 years in this industry. I've traded FX, I've run settlements and operations for money market and foreign exchange and rates. I've implemented a number of single dealer platforms for Deutsche, for JP Morgan and also BNP Paribas. And in between started up a Fintech company and focused on payables financing and got a patent for that and co-sold that throughout Asia with Singtel Optus. In the last 4 or 5 years, I've been fortunate enough to be COO for G10 rates, for FX, for credit markets as well. And during that time, I've been very fortunate to see some big technologies that have come through and transformed the industry. So if I look at single dealer platforms, for example, when we kicked that off at Deutsche Bank, we were going through a lot of the same sort of arguments that we're going through today around why should we embrace new technology, what is the internet, how will that work, etc. And I'm seeing the same sort of parallels with blockchain and DLT. So today I'm going to be talking about FX Everywhere, which is HSBC's DLT platform that we've been using in production now for just over a year. And what I wanted to do was talk about the why, the what and the how. So starting off, if we go back to basics and how we started this particular journey. When we started this journey 18 months ago, I was trying to break it down into some very, very simple paradigms and foundational pieces. So if you think about any financial instrument, it ultimately ends up in a payment. Why is that important? Because if you're able to capture these payments and post them onto a ledger, then you're able to have certainty and transparency of where those payments are. The emerging digital markets and technologies are changing the way how FX is transacted and how payments is processed. And I'll go through some of the stats and figures around that. These technologies are and will continue to speed up global e-commerce. And we're starting to see that today. Therefore, the key in all of this is having certainty and visibility of FX and payments in the new world is key to transforming and controlling working capital. So if you look at the emerging digital markets and what we're seeing out there and what are the big trends that we're witnessing in the marketplace. First of all, if you look at the evolution of the internet, back in the late 90s, we had the internet of data. That's where we're sending packets of data across the internet. We then started to move into the transportation of content. So that's where YouTube and music videos were being streamed across the internet. And now we're moving into the internet of money. And the transportation for that money is increasingly becoming a distributed ledger technology and blockchain. And I'll just pause for a second on that, because often people say, well, what is the difference between DLT and blockchain? Blockchain's expensive. It takes the energy consumption of Switzerland in order to achieve consensus on particular trades. So DLT is, or distributed ledger technology, if you think of it in its simplest term, it's a shared database or ledger where you update the records of any transactions. Blockchain is part of DLT, and it is a message that is stored on distributed ledger technology that gives you a full audit trail of what's happened with a particular transaction. So the other sort of themes and trends that we're seeing is around crypto and digital markets, or crypto and central bank digital currencies. So if you look at cryptocurrencies, there's something like 140, or no, actually more than that, 400 different cryptocurrencies that are out in the marketplace today. Most of them, we think something like 80% of those cryptocurrencies will ultimately fail and will go bust. We saw the boom and bust of Bitcoin last year. It's still around and still being used, but it's nowhere near the value nor the amount of transactions that we're seeing using Bitcoin today. We do believe that central bank digital currencies will become more and more prevalent in our society. So we're HSBC, we've been involved in a couple of different projects, Project Dubin, Project Jasper, with central banks, exploring how they could use central bank digital currencies to look at how they become more and more cashless in the way that they transact commerce in their economy. So if you're looking at Sweden, by 2022, I think they're saying that they're going to be a purely cashless society. They're only going to have digital currency in circulation. Moreover, the central banks are also looking at how that will affect their monetary policy and looking at how they set interest rates. We think ultimately that central bank digital currencies will become more and more prevalent and widely used across the globe. Then if you look at APIs or application program interfaces or machine-to-machine connectivity and PSD2, which is a new initiative that's coming out, that means that banks are having to open up the way they provide services to clients. So more and more you'll see that open banking is becoming more and more prevalent. We're seeing that we're having to expose the way that we do our FX, our payments, etc., to small to medium fintechs and other companies. So we're having to open up the bank. Then if we look at fintechs and tech giants, so I've seen quite a few different papers out there describing how many fintechs and tech giants there are out there. The latest study I saw, there was something like 12,700 fintechs, and they've had over $165 billion invested in them. That number's gone up significantly. I'm sure a lot of you saw the news overnight and yesterday where WorldPay was brought by FIS for $43 billion. So that takes the amount well over $200 billion that's been invested in fintechs. And then if you look at some of the tech giants, so the likes of Amazon, Google, Alibaba, Tencent, etc., these guys are becoming more and more credible in our economy and the way that they transact with their particular clients. And I'll use Alibaba as a good example. So if you think about Alibaba back in 1999, they started their business with a notebook and a fax machine. Recently, they've just gone over the 1 billion user mark on their particular platform. And on their equivalent of Amazon single day, they had, which is 11/11, they had over $31 billion transacted through their platform in one single day. At its peak, they had over 256,000 transactions per second going through their platforms. So these guys are credibly competing against banks. And the way they started their business was around payments. So they realized that payments have a certain amount of value and information. And what they do is they build up a view of their particular clients and how they're transacting over their platforms. And then they look to offer them financial services off the back of that. Because their clients are starting to build up a credit rating by the way that if they're paying for goods and services on time, or if they're building up an amount of cash in their wallet on their platform, they're looking to provide additional services to them. Instant payments and mobile. I was going to ask a quick question here. How many people have got cash in their wallet? Maybe just a show of hands. It seems to be a bit more prevalent in Europe, but if anyone's been to China recently, it is very, very difficult to buy anything without having your mobile phone and a QR code. And there's been examples in China where the government is starting to crack down on merchants that are refusing to take cash at their shops. Right, so they're really concerned about the amount of money that's going into digital, and predominantly with Alibaba and Tencent. And the expectation is that when you pay for goods and services, that should be instant. However, from a treasury perspective or from a bank perspective, those payments, as we know, can take several days. So what we're seeing is that lots of people are expecting that their payments are instant. And so we're trying to look at how we can bridge the gap between what's happening in the wallet economy and mobile and what's happening in the banking economy. So then with all this new information that's being collected on DLT and blockchain, we're looking at how we can analyze the data, provide some artificial intelligence around that, and look at the machine learning, similar to the Alibaba example. If we're able to build up this clean set of data, what are the additional services that we're able to provide on top of that? And if you look at smart cities, and I'm sure there's been sessions on smart cities today, and you look at the evolution of smart cities. Smart cities aren't going to be here tomorrow, but probably in the next 20 to 30 years. And you may say that's a long time. However, there are cities that are being built in China, for example, and they're embracing 5G technology. And again, what are smart cities being built around? They're being built around data, so that you're able to offer services to clients as they move around that city. Whether it's insurance, whether it's they're walking into a shop and providing them an offer on the latest goods and services that they have. Then this slide talks about the Industrial Revolution. Again, why? So what we're looking at is back in the 1760s, we started off with machinery. We moved into electricity. We started seeing computers coming of age in the 70s. 2000, as I mentioned before, we had the internet. And now we're moving into something completely different, which is looking at embracing some of the internet technologies and how we can offer that out to our clients. Moreover, if you look at the generations and how they're changing and how our parents transacted with financial services and how they did business to the way that Gen Z, I can't believe we're up to Gen Z already, transact today, it's very, very different. So if any of you guys have teenage sons and daughters, you'll see that the way they communicate and they transact information is very, very different to the way that I certainly did when I was growing up. They can pretty much do everything they need to do over a mobile phone. And they can communicate with their friends, they can ring them up, they can talk to them face to face, they can go and set up a bank account reasonably quickly just using their mobile phone. So the way these guys are expecting services is changing as well. So what does that mean from a company perspective? What we're seeing now is that the average lifespan of companies is accelerating as well. So the average lifespan of an S&P 500 company has just decreased 52%. And in the last 15 years, a lot of them have just disappeared away. So what we're seeing now is that there's higher turnover of companies, and those companies are becoming more and more digital. So bringing it back to Treasury, this is from and cash management and payments and FX. This is a survey that HSBC did last year. And what it's saying here is that one of the big concerns for treasurers is their FX risk that they accumulate. Also, our treasurers are thinking about a more strategic way is required to how they can efficiently manage risks. And also, they are resource constrained at the same time, and now they're looking at how digital can help them in this challenge they have. So we believe that the on-ramp for digital is FX and payments on DLT. And when I looked at this 18 months, 2 years ago, I was trying to think, what are the business features? Why do we care? Everyone's been talking about, well, not everyone, a large majority of the industry's been talking about blockchain for some time. It's been around for 10 years. So what's changed? What are the business features that I'm able to use that will provide benefits to us? And there's three key things. Singularity, so that means that we have a single version of the truth of any transactions that are placed onto a DLT. We have transparency, and so for us we have transparency of FX transactions from the time that they're being transacted to the time that they're being settled. Immutability, which is just a fancy way of saying we have an agreed transaction, and that agreed transaction is locked and loaded onto DLT. And what that means is that we're able to treat that differently from a balance sheet and financial perspective because we have settlement finality with those particular trades that are stored onto DLT. So what that provides for us within HSBC, with the implementation that we've been live on for over a year, is a single version of truth between all the different operations centres that we have across the globe. Because at HSBC we have tens of balance sheets and we have tens of different risk management systems, settlement systems and payment systems. To have a single version of a truth of what's happening with our transactions that we transact between ourselves is hugely valuable. So what are the technology enablers for that? We have somewhat smart contracts in that when we transact an FX trade between, say, HSBC Americas and HSBC Europe, and it's a euro-dollar trade, we'll split those two components of the euro and the dollar and post them onto the ledger. And then throughout the life cycle of that trade, up to settlement, it will net down the euro amount, net down the dollar amount, and conduct payment versus payment between those two transactions. We have a shared permission ledger. And why is that important? Again, when you look at technology, a lot of people are concerned about, they hear about blockchain and they hear bad things about blockchain, whereas if you think about any technologies in the way that you implement it. So the way that we've implemented it within HSBC is that we have a shared permission ledger. And why is that important? It's important because we're able to control who joins that shared permission ledger. We're able to control and make sure that it's performant for the amount of trades that we're putting through that shared permission ledger. And also we're using blockchain. And blockchain for us on the shared permission ledger provides us an audit trail of every time that a particular transaction changes. We're able to see from the trade has been matched, the ownership has been changed, it's now been paid. So we get a full audit trail of what's happened with particular transactions. Again, just to go through the DLT piece again. So here's a few things that are important to note. First of all, information is stored by each participant on a distributed database. So we have a distributed ledger or database that we use across the globe within HSBC. It's not centralized. There's no middleman owing data. It's got cryptographic security, therefore it's really strong and it's very, very hard to hack. It's immutable, so we're able to track and trace what's happening with particular FX transactions. And assets can be transferred and shared across multiple participants. So whoever we invite into our shared permission ledgers are able to see what happens between those different participants. Ability to connect to different networks and ecosystems and platforms. So one of the speeches I saw earlier today was from ING, and they're talking about the number of platforms and ecosystems that are evolving. So we see that this is a good way to connect into those. Processes automation through smart contracts. As I was saying before, the way that we've implemented it within HSBC, we've automated a lot of the matching, the confirmation and the settlement of our FX transactions between ourselves. Permission blockchains is super important as well because we're able to control who joins the shared permission network. So some other applications that we're starting to see in the marketplace of DLT in payments. So we're seeing cross-currency settlements. That's what we're doing on a daily basis. There's domestic payments and KYC, international payments, security settlements. So we're seeing things like DCCC that are coming into life. Trade financing. So there's things like Voltron, WeTrade, etc. that HSBC are participating in. So we've started, as I said before, our journey with DLT within HSBC. We have a live use case where we've put over 5 million transactions onto the ledger. We've made over 500,000 payments on a daily basis. We're making between 3,500 and 5,000 settlements per day. And that total amount that we've settled over the DLT platform is over 500 billion. So it's something that we're using on a daily basis. And we're seeing lots of benefits from it. And similar benefits at our clients when we're speaking to clients about how we could potentially extend the shared permission ledger to them. So the solution reduces the number of FX payments that we make, streamlining operations and optimizing our balance sheet because we have the ability to have certainty and transparency of our FX transactions between the different balance sheets, and we're able to minimize the amount of FX risk between them. mentioned that before. So for HSBC and our clients, where do we see the benefits? We see that there's more visibility, better control of everywhere, so wherever our transactions are and wherever our clients are. So at the moment, within HSBC, we have transparency of our FX trades through to settlement, visibility of our forward cash flows, and certainty of funds throughout the funding cycle. What does that, you may say that's very clever, thank you very much. However, what does it actually mean, and what are the benefits that what has it resulted in? It's cost reductions, so for our operations teams, for the trades that are being sent to the shared permission ledger, we've been able to reduce our operations cost by 25%. We also see that there's revenue opportunities, revenue protection opportunities from improved working capital, not only for ourselves, but also our clients and our clients' clients. We also see that there's balance sheet optimization, again, because we're able to treat the FX transactions on the shared permission ledger in a different way because we have a rule book that describes settlement finality. And we see that the evolution is embedding into supply chain and trade channels. So again, if you go back to the beginning, you think about any particular transaction or any financial instrument ultimately ends up in a payment. If we're able to connect into some of our clients' TMSs and ERPs, then we're able to capture those particular payments, put them onto the ledger, such that we're able to build up a view of our forward cash flows with them, also be able to streamline our operations and reduce our balance sheet exposure against our clients, and therefore improving working capital. So I'm going to wrap up and open up for questions. So again, going back to the very beginning, if you think about any financial instrument ultimately ends up in a payment, and if you're able to use this new world technology of DLT and blockchain, you're able to treat those payments very, very differently, and able to bundle different services and solutions to our clients using that technology. The emerging digital market and technologies are changing the way FX payments or FX is transacted and payments are made. And these technologies are and will continue to speed up global commerce. So we're seeing lots of different examples, and I'm sure some have been spoken about today, where there's a number of different initiatives out there like IBM Food Trust, where they're looking to track food from the farm to fork. And so what we're looking to do for those particular initiatives is how can HSBC be that DLT bank to support some of these emerging ecosystems and platforms. And the key to all of this is because of this technology, you're able to have certainty and visibility of where your FX and payments are from the time they're being transacted through the time they're being settled. So I'll take a deep breath there. I keep getting signs thrown up at me in the back there, so there's a few minutes left. So I'll open it up for questions. Is there any questions from the floor? No? Okay. Oh, yes.
Is HSBC thinking about putting some FX protection on cryptocurrencies?
That's a great first question. So we have looked at cryptocurrencies. We've always been said we'll be led by our clients, and to date we have not had any of our clients come to us and say, hey, we'd like to trade Bitcoin. So it's not something that we are looking at. We think there's a few different stable coins that are being discussed. So more recently, we've had things like JPM coin come out and be discussed. However, from what we understand, it's very limited usage. It's up to $1,000 worth of US dollars worth of value, and it's just on their settlement network. However, when we look at HSBC's heritage, if you pick up a Hong Kong dollar and you flip it over and you see who's issued that, it's HSBC. So we do have a heritage in issuing currency. And one of the things that we have spoken to a number of clients about, just trying to get a bit of an idea of whether there's interest or not, is to issue an HSBC coin, potentially. And At the moment, I think it's a little bit early to answer your question, but the idea around that is you'd carve off part of our balance sheet, you'd have a basket of currencies using the same DLT that we've implemented. You could potentially pay your supply chain using an HSBC coin, and then turn up to any HSBC branch and convert that back into fiat currency. So I could see that sort of thing working, but for true crypto, not at this stage. Any other questions?
What kind of technological partner do you work with on that experimentation?
For the live production system that we have, we've partnered with a couple of Fintechs. So one of the Fintechs that we've partnered with is a company called Baton, and they provide the underlying PVP solution for us. It's put on the cloud, and we're able to go to market very, very quickly using them. Any other questions? No, stunned silence. Either it was very, very clear or nobody has any idea what I was saying because it wasn't in French. Okay, any other questions? Okay, well, thank you very much for your time. Again, just to reiterate, a lot of people, a lot of the clients that we've spoken to, so I've spoken to well over 100 clients about this. The question that I most often get asked is, I've heard about DLT and blockchain, haven't seen it being used anywhere, and I haven't seen a business case. All right, so what I wanted to talk to today is, well, HSBC is using this on a daily basis. We do have a business case, and we are using it on a daily basis. And from the press releases that have gone out, typically that flushes out a lot of competitors to see if there are any competitors. The feedback that we've received so far is that we are in a leadership position, which is nice for HSBC. So anyway, I'll thank you all very much for your time. If you've got any other questions, come and see me afterwards. Thank you very much.